matter because there are many changes which are in the offing, many kinds of changes that are being contemplated, and the department is itself planning to go for a full-scale computerization of its operations, make e-filing the accepted mode of e-administration, tax administration. So all these things need a bit of change management, both at the level of the department, at the level of the taxpayers, and in that the chartered accountants will be the critical agents. So we look forward to your cooperation. We look forward to your support in our endeavors. For the coming year, this financial year 2012-13, as I have already indicated, we have a formidable task of processing more than 2 crore returns. We are hopeful and confident that we will be doing that. Besides all the other issues where we had got a number of rectifications and refund issue matters, we are trying to take them in a time-bound manner and complete those activities. With that backdrop, let us come down to our real topic of today. Like all of you are having certain types of problems which need resolution. I will be making mention of most of these areas because we have identified the key areas ourselves, and I hope that in course of the presentation most of your problems will be addressed and you will be finding the solution to those things. If anything is left over or we have not directly taken up, we can cover that in the question answer session that follows this presentation. Now the major issue, as we said, that for processing accurately we require accurate return, we require the accurate tax particulars, we require the accurate data to transmit the refunds or even the intimation orders. So these are the areas which are the typical problem areas. As far as the data in the return is concerned, we had seen that large number of private softwares were being used at different regions, and the data captured through those softwares were not flowing properly to the department's database. That itself was causing a lot of inconvenience because the processing was not accurate. Now to address that, in the recent e-filing, we are also trying to revamp our entire e-filing platform. A new e-filing platform will be introduced sometimes in October. In addition to the income tax returns, there will be several other forms like all the chartered accountant certificates, form 3CV, 3CD and all those things, TDS returns and several other forms which are to be submitted in course of the scrutiny and other assessment proceedings. They will now be uploadable, they will be all electronic and they can be filed through the e-filing site. So the e-filing platform is undergoing a massive expansion, and one of the agenda there is to provide for the certification of the utility for return preparation. Now, of course, for the current season of filing, where we have released ITR 1, 2, 3, 4, 4S immediately, we are relying on the older platform. 5 also has already been notified. The attempt is that 6 and ITR 6, when it is rolled out, sometimes after a month or so, it will be done in the new e-filing platform. And once that is complete, for the next season, we will be taking the software, we will be looking really into the software certification part of it and validate the software before anybody can use that and upload the return to the e-filing portal. That is one of the plans that is in the offing. Then, other than software being used, sometimes deliberate or indeliberate inadvertent mistakes creep into the preparation of the return itself. Now return, if you have cared to look at a return like ITR 4 or ITR 5 and 6, it's a fairly detailed return with several schedules, and the computation, the general scheme of these returns is that the primary information is to be filled up in the schedules, and from the schedules the data will be picked up in the higher levels, like in the computation of income, various heads of income, they all flow from the schedules. So in a typical system, automated system like CPC, if the schedules are found to be missing the data, then the entire processing goes haywire. The system cannot interpret or cannot validate the income or the items that are filled up in the subsequent, like Part B TI or Part B TTI or the exemptions. All these things cannot be computed correctly if the relevant prescribed schedules are not filled in. This is one of the major reasons for the returns getting processed inaccurately, and ultimately it causes grievance, it goes into a rectification, it goes into a loop where no time is taken to get it back, to retrieve the situation. So this is one area which needs a bit of attention when the returns are being prepared. Then third area, major area, is about the tax credit mismatches. This is the issue which happens because of three basic reasons. Either the tax deductor has not uploaded the return, the TDS returns, or even after uploading they have not put in the PAN correctly. This is one of the reasons. Second is when the taxpayer has prepared the return, he has committed mistakes. He has not captured the tax particulars correctly in the return itself. So even though he may be seeing a visible credit entry in the form 26AS, because of the mistake he has put in the return, sometimes there will be a mismatch. And the third category, which of late has come to our notice, is that there seems to be a gap, data gap, between the information that is received by NSDL and the information that has flowed from NSDL to the income tax department. So this is a very important issue and a very alarming issue. As recent as 2 days back, we found that suddenly some data has flown in from NSDL to the income tax, the department side, of several tax challenge tax credits which belong to earlier years. So this is a very sort of a alarming thing for all of us. We can't also do, we go on processing the returns based on the data as available on that day. And if some credit is not available, the demand is created. And the credit for that flows to the system after a long time. So that's a issue which we have also flagged and taken up with the higher ups in the Directorate of Systems, and they have also expressed their keenness to resolve this issue. So once that is done, and at our level also we have suggested for a periodic reconciliation between the data that comes in to CPC and the data that is there with NSDL. Hopefully with a reconciliation mechanism in place, there should be no data gap between the two agencies, and all that will be left to handle is only the two types of mistakes where the deductor has either not uploaded or taxpayer has created a mistake while filing the return. So those two types of errors will be easier to handle, they are rectifiable. But the third is the major one which we are trying. We are already focused on that issue, and hopefully some resolution will come on that. Then there is the issue of data gaps in a return in the form of bank accounts, addresses, issues like that, because of which a communication cannot go. Sometimes also here I would like to add that many times the communications from the CPC do not reach the taxpayers. Taxpayers are left in dark about what has happened and all. Whereas the fact is that for any kind of a process which happens at CPC, there is a mail that goes to the taxpayer first. Unfortunately, in most of the cases, the mail address, a common mail address is given for several taxpayers, because chartered accountants generally put their mail address in respect of their clients. So if you are handling 100 taxpayers and give the same account, same email address, all these mails will be going into the same. Probably your email client will treat them as spam, or you may not be having time to check up on those mails. So this also causes a communication gap. So despite our efforts, our messages, we are not able to reach out to the taxpayers. So this is one area where we would also like some brainstorming from your side and some sort of a solution from your side how this can be taken care of. Then last but not the least, the issues relating to ITRV, which is the verification form, and though the large, when we have processed more than 2.5 crores returns, but we must have handled more than 3 crores ITRVs, but still we feel that when many people are not very confident, they feel they say that I have sent ITRV 4 times, 5 times, it has not reached CPC. Now anybody who has visited CPC would vouchsafe that it all happens in a very well governed manner. Any document that reaches the doorstep of CPC is going to be accounted for, and there is no case of missing at CPC. We can't say the same for India Post or anything through which it travels to CPC, but by and large, when we verify, it's not a case of ITRVs getting missed at CPC. We have gone into some of these typical grievances where the taxpayers, the chartered accountants have furnished the entire list of ITRVs they sent in one bundle or something like that, and said that they have not received. So we have verified that each and every one of them have been accounted for. Messages have been sent, acknowledgement messages have been sent, but unfortunately we do not know whether they have opened their mail or they have checked on the mail, but the allegation is made that they are all missing and they have not been accounted for. So I would take this opportunity to assure you that it happens in a very controlled manner, under strict supervision of our service provider and our team also, and the entire process is happens with closed circuit TVs monitoring the entire process. So and the envelopes are opened envelopes are checked and rechecked to see whether anything is contained or left out in those things. So from our side, we are pretty confident that once it comes into CPC, there will be no missing of ITRV. Nonetheless, since this is a problem expressed by some chartered accountants, we are trying to make this system even more foolproof, in the sense that the earlier we were not having a speed post receipt center, and we were dependent on a post bag number which is in a post office nearer to CPC in Bangalore. We are trying to bring that CPC, the speed post receipt center itself into the building in CPC, so that direct delivery takes place in the CPC, at CPC's gate itself. So that probably will take care of some of the problems, but we have understood over those years that while we are talking of e-filing, electronic mode of filing, we cannot rest contented with a vestige of a paper. That needs also to be removed. It has to be 100% electronic affair. So we are examining the possibilities of providing an electronic signature, a PIN-based signature, personal identification number based signature, which is prevalent in many other countries, and that will be the solution to the ITRV as per our expectations. It will obviate the need of sending a signed copy of ITRV. Hopefully from the next year we will be able to introduce that. Now coming back to the specifics here, let us go into the brass tack of the entire problem. Our processing doesn't happen accurately if the data contained in the return is not correct. Now some typical examples where the data comes in a wrong way to us and which will impact the processing needs to be borne in mind, and all of you should also be taking care during this filing season when you prepare the returns. Please ensure that these kinds of mistakes do not happen while preparing the returns, so that your experience, your accountability to the taxpayer will also not be in question. Now, PAN name mismatch sometimes causes a problem. The return cannot be processed accurately, or the credits cannot be given if you use a improper PAN. And if the names are also wrong, sometimes the refund check can go to a person and the banker may not agree to credit it to your account. So please ensure that the name that you put in the return is as per the PAN itself. The name as in the PAN is put in the return. So sometimes we cut corners, sometimes we just mention few of the, typically in a Tamil name there will be 3 or 4 these things, we will put the abbreviated thing. Do not resort to those kinds of a thing, let the name be as per the PAN. That's the simplest thing that we can do. It can reduce a large number of errors. In some cases we have noticed that the gender also is not put correctly, though the taxpayers, it happens especially in case of ladies. Sometimes they are under the impression that their PAN carries the same gender, but because of certain historical errors, the PAN database of the department contains the wrong genders. You might have filled up that form long time back, and it might be showing the gender as a male. So when the return is filed in CPC, electronic return, claiming as a female, the first thing that the system does is to check up against the PAN database, because it's a question of allowance of extra benefits. So if it finds that in PAN database the gender is different, then the PAN database overrides whatever data you give in the return, and processing happens accordingly. Just because you have finally computed that you do not have a taxable income doesn't mean that you will not fill up the return correctly. You will only fill the TDS or the tax portions and claim them as refund. The return is to be taken as a whole. We cannot simply fill up the parts which are compatible with and leave the other parts. Next point is also more or less the same thing. The tax details do not match with the incomes offered. Like in the Part B TI, you show some income from interest, some income from other sources, some income from salary, but they have no sort of a correlation to the incomes that are shown in the profit and loss account, in the scheduled TDS, scheduled salary, or for other incomes. So mismatch between the information in the Part B TI and mismatch in the schedule, that is one of the major reasons. And because we do it on a rule-based processing, because there is no human being who is doing and going to take some sort of a decision, they are all put through several business rules. So those rules take precedence, and they compute on the basis of whichever is the higher they will take up. If you have shown something lesser in the Part B TI, but your schedule show higher incomes, the higher income will replace, and it will result in demand. Your entire calculation will be different. Salary income, mostly if you are handling the salary cases, salary income is not shown in Part B TI, where salary is to be shown, where income under the head, but TDS from salary is claimed in Schedule TDS 1. Then many of the business returns we find that the taxpayers feel that their job is over once they have filled the schedule BP. and the Part BTI. Schedule BP stands for business profits, and Part BTI is the general heads of income. They don't turn over the pages of the returns to see that there is a profit and loss account and balance sheet which also needs to be filled in. So, in the absence of that information, profit and loss account will not be reckoning, that return will not be considered as a valid return. If you are claiming business income and you are saying that it's, you have picked the flag that it is liable for audit under 44AB, but you do not fill up the profit and loss account. These kinds of mistakes also happen. I mean, you may be wondering, you might not have done these things, but this is our experience at CPC. The data that comes in ultimately, either thanks to the software you have used, thanks to the people you have used to prepare the returns, sometimes do not get captured correctly and comes to CPC. So CPC is in a very helpless situation in those things, and if it processes those returns, it is going to cause a grievance to the taxpayer. Then there are certain cases where the books of accounts are not liable to be maintained, maybe presumptive incomes or the incomes which do not call for maintenance of books of accounts. So there is a specific section in the profit and loss account schedule, P&L and schedule balance sheet have separate sections at the bottom for no account cases. They need to be filled up. They are mandatory to be filled up. If they are not filled up, then probably that incomes or something that will not be recognized as correct, and any claims expenses against that will also not be allowed in our system. So this data integrity is required in respect of incomes which are businesses which are not liable to be maintained, books of accounts are to be maintained. Then most of the other deductions like depreciation claims, they get disallowed because of primarily two reasons. One is that the respective schedules have not been filled up. That is one of the major reasons. The second major reason is when from P&L account you have to, again when you come to schedule BP, you have to add back and then claim the deduction as per the income tax provision. If this doesn't happen correctly, or the profit before tax is picked up from the wrong place in the schedule P&L account, then the depreciation is liable to be computed incorrectly. Same goes for Chapter 6A deductions and deductions under 80IA, IV, IC and 80G. Claims may be made in the schedule BP or while in the relevant portions or computations are made, but the respective schedules are not filled in. This is one of the key areas which needs to be. I think this presentation is going to be given handed out, so you need not take notes or anything. It is going to be handed over. Brought forward loss generally doesn't get allowed if you have not filled in the CFL and BFLA schedules. And not only that, you might have filled up the CFL, but the years you have not mentioned, then the loss will not be allowed to be set off against that. Again, in a business case where P&L account and balance sheet both have not been filled, but positive income is shown in schedule P&L, schedule BP. ITR 4S has got a problem where the presumptive income is computed less than the required margins, required ceilings. assessment 11-12 till 11-12, probably the instructions were not very clearly worded or something, so which has prompted many professionals to file return under section 4S. So that has been rectified. I mean, the instructions are very clear now in the assessment at 12-13. This 4S is not meant for professionals like chartered accountants and others. Then sometimes the taxpayers say that my income has been taken twice. I have only one source of income, but it has been computed twice. You have double income. So one of the possible reasons for that is that in case of incomes like capital gains and all, they fill up the respective schedule CG, but where they indicate one code for it, like whether it is a long-term capital gain with proviso or without proviso. But when they go to the schedule SI, there they put the code wrongly. They choose the code wrongly. So because of an interchange of code between these two schedules, the system will take both as independent incomes. So you can understand that these are all very petty type of mistakes. It's not rocket science and all. Simple mistakes which can be avoided if we take a little time while preparing the return, and it will reduce all these agonizing wait for the intimation and all these things. Provision of tax is not debited in schedule profit and P&L, but it is shown as debited in schedule other information. So that causes increase. It's not the provision of tax getting added twice. Then in ITR 5, where you have got several categories, the code if you mention wrongly, like LLP or a PAM or a AOP or anything, the entire schema of computation will change. Then schedule MAT and MAT C, MAT credit, they are also sometimes not filled correctly. There was a deficiency in the form till assessment year 12-13, 11-12. The schedule MAT begins with, the nomenclature there in the return says that profit before tax. That was an anomaly because that place is intended to give, report profit after tax, if you look at the schema of the things. So many times the assessee go by the wording in that in the return. Though if they try to understand the computation scheme, what should be coming there is profit after tax. Then you add back the tax debited to the P&L account and other depreciation to compute the book profit. The computation scheme is clear. So while processing the return, CPC will take the profit after tax there, because that is available in your schedule P&L. But because of the confusion in MAT C schedule form, sometimes people are facing this problem. This has been rectified in for return for assessment at 12-13. So this should be no longer a area for confusion. Then there are also some confusion regarding the MAT credit, regarding whether the this surcharge and the education cess should be computed after debiting the MAT credit or not. That anomaly has also been rectified. Earlier, what was showing the first after computation of the tax liability, the MAT credit was being debited against that. On the remainder, the MAT and the surcharge and the education cess was being computed. So instead of that, now the entire tax along with education cess and surcharge will be computed, and MAT credit will be deducted from that. So that may not result in extra calculation of 234 BC interest. So basically these are all some typical cases, but there are more than this list. In fact, I have got a list of about 60 such situations which also recurs in case of a rectification request. Whatever, while processing whatever mistakes that are detected, more or less the same data inconsistencies come up in a rectification scenario also. So because of that, almost 50 situations are there where the data inconsistencies, that's quite too long to present in course of a presentation, but we can always share that. We are planning to put those scenarios on some of these websites so that everybody can take note of that and prepare the while preparing the returns, they will be a little bit watchful of the situation. Now coming to the next major issue of the tax credit mismatch, I have already said the three major reasons that are there to cause a tax mismatch. The second reason, which I said, when the taxpayer doesn't fill up the return correctly as far as the TAN numbers, the SIN numbers, etc. are concerned, these are avoidable mistakes, and this can be handled through a rectification. Once when we process, we also generate a list of mismatched entries, and it goes as a separate annexure to the intimation itself. If you look at that statement, you will know which of the particular credit claimed in your return has not been allowed and some possible reason for that. In 90 out of 100 cases, it is because either your TAN is not correctly claimed or is correctly input, or the challan particulars are not correctly input. So by comparing the information you have furnished in the return and the 26 AS which is available from the NSDL, you yourself can resolve many of this. You can find out what are the differences. So the next step is to correct them and file an online rectification with CPC. So it will be easily rectifiable at CPC once the correct information is given. As far as the other issue where the credits are not uploaded to the TDS by the deductor to the NSDL, there I'd like to share with you that recently the department has taken up the job of setting up a CPC for TDS returns also. In Delhi it has set up. So one of the agenda of this CPC is to monitor the non-filers of the TDS returns, because from the data which we give about mismatches and the data which they will get by processing the TDS returns, they can zero in on those tax deductors who have not uploaded the return or not remitted the taxes, the TDS to the government account. So that will be a potential step to reduce some of the mismatch situations. So we hope that these two, and of course as regards the data loss between NSDL and Income Tax Department, that step is already on. With this three-pronged approach, we'll be able to tide over the mismatch of credit situation. Of course, to add here, the board has already given instructions to the assessing officers in the field that wherever such mismatches are there, they can also look into the claims of the taxpayers and take their evidences on record and allow the credit. We have at CPC also sort of transferred the rectification privileges to the assessing officers on a need basis. Sometimes some assessee whose grievance cannot be handled even after a prolonged lapse of time because his credit is not coming in NSDL, we are transferring the rectification right to the assessing officer. Because in case this happens, you can go to the assessing officer, produce your Form 16 and take the credit from him. Not happening. Okay. I will tell you, the reason is because certain refund frauds, they have come in between, and the people have become a little alert because of that. And otherwise, this was being allowed earlier also. Form 16 if you produce before then. In fact, there was in Ahmedabad they had set up a single window kind of a thing where people who have got the mismatch when the tax credit is not allowed, they can go to the office, produce their Form 16, and the officer sitting there will certify and allow the credit to the. We'll take this input from you and we'll definitely do it, because there are certain situations where CPC will not be able to grant full credit because CPC is more rigid compared to the assessing officers. We do not have any mechanism of checking your TDS certificates and allowing credit. So
even after 26 years, he sees the 26 years and says no.
I told the reason for that is the data gap between the NSDL data and the department's data.
I am producing 26 years taken from the website, entered, I am showing him. No, I can't do. As I said,
no, but there is a remote, but very slim but potent chance of the credit in 26 years getting reversed.